Hey everyone, and welcome back for another deep dive.
Uh,
This time we're tackling Rich Dad's Prophecy by Robert Kiyosaki. You know Kiyosaki, right?
oh, yeah.
From Rich Dad, Poor Dad.
Huge bestseller.
Now this book, Rich Dad's Prophecy, it's about retirement planning. I know,
Not always the most.
not the sexiest topic,
Yeah.
but Kiyosaki really gets into some interesting stuff here. He predicts this big financial shakeup. And we're going to break down what it means for you, for your future, your finances.
Right. Yeah. It's all about, being prepared,
Exactly.
for what's coming down the pipeline.
So to kick things off,
Uh-huh.
Kiyosaki dedicates this book to a high school teacher
Oh,
who is pushing for financial literacy.
that's right.
And it's interesting because he's really highlighting this gap in our education system, right?
Huge gap.
This idea that we're not really taught
Mm-hmm.
about money.
Yeah.
And he argues that this lack of knowledge is the biggest threat to your financial security.
Yeah. It's not just, the market going up and down, or
It's deeper than that.
it's a fundamental, lack of knowledge
Yeah.
that's holding people back.
Okay, so he doesn't stop there. He points to this law, ERISA, passed in 1974,
1974, big year.
as this turning point. So what is it about ERISA? What happened there?
Well, ERISA was a massive shift. It basically transferred the responsibility of retirement planning from the employer to the individual.
Okay.
So think about it, before ERISA, a lot of folks had pensions. Their company said, hey, look, we're going to take care of you in retirement. Here's a guaranteed income for life.
Without it.
But ERISA really paved the way for 401ks and similar plans, where it's more like, here's some tools, good luck.
So it went from we got you to
Yeah.
figure it out.
Pretty much, yeah, a lot more responsibility on the individual.
And that's where that lack of financial education really comes into play, huh?
Big time, yeah. Kiyosaki compares it to driving. You're focused on the radio, you miss that sharp turn sign,
Oh.
and boom, you crash. And in this case, the crash is your retirement savings,
Okay.
taking a major hit.
So is that what Kiyosaki's saying? That ERISA kind of set us up for failure?
I think he's arguing that. Understanding these shifts is really crucial. He's not saying ERISA itself was a bad idea, but that it made financial literacy absolutely essential.
Right.
And to illustrate this, he points to Enron, the collapse of Enron in the early 2000s.
Enron, yeah.
Huge scandal. Massive scandal.
I vaguely remember that. Can you remind me, what's the connection to Rich Dad's Prophecy?
Well, think about what happened. Employees lost their retirement savings. They were tied up in Enron stock
Right.
in their 401k plans.
Right.
It became this cautionary tale of relying too heavily on these plans without really understanding investing, without understanding risk.
Yeah.
It was like Kiyosaki saw it coming. People depending on a system they didn't really grasp.
Okay, so now let's talk about Kiyosaki himself. He's really open about learning from his rich dad, who challenged this kind of traditional financial thinking.
Right, yeah.
So how does that tie into this whole idea of preparing for retirement differently?
Well, Kiyosaki contrasts his rich dad's advice with what he calls his poor dad's path, the traditional job, the pension, playing it safe,
Right.
just kind of going through the motions. And he learned from his rich dad that sometimes you got to dive into the deep end, even hit rock bottom to really understand how to build wealth.
So it's not just about avoiding risk, it's about understanding it.
Exactly. Managing it.
Okay.
It's a different way of approaching things.
Which brings us to his concerns about defined contribution plans,
Oh, like 401ks?
especially compared to
Yeah.
The older defined benefit pension plans.
Okay, break that down for me. What's the difference?
All right, so imagine a defined benefit plan, like a steady pension check every month, no matter what the stock market is doing, it's guaranteed. But a defined contribution plan, that's tied to your investments. So its value can go up, it can go down,
Yeah.
which means your retirement income becomes much less predictable.
So defined benefit, you know what you're getting. Defined contribution, it's more of a gamble. You could say that, yeah. It's definitely more tied to market performance.
And Kiyosaki argues that.
Yeah.
Folks relying on defined contribution plans, especially as the market gets more volatile or more exposed to that risk.
Right.
And this leads to his prediction about baby boomers and retirement.
Yes, he predicts that. A huge chunk of baby boomers won't have enough for retirement.
Really?
He even goes so far as to say that millions could face financial hardship post-2020 because of a massive market crash.
Wow. Okay, that's a pretty scary prediction.
It's definitely a bold statement.
So what's the logic there?
Well, he sees this wave of baby boomers hitting retirement age. They need to pull money out of the market all at the same time.
Right.
And this mass exodus coupled with their longer lifespans. And increased reliance on government support. It creates this huge financial strain that he believes could trigger a historic crash.
So he paints this pretty bleak picture. But he doesn't just stop at the prediction. He actually goes into some common financial advice that's given to retirees.
Yeah, he analyzes it, breaks it down.
He talks about this example. In the Miami Herald, there was a 70-year-old seeking advice. And the financial planner just tells them, hey, systematically withdraw from your mutual funds. Which, on the surface, sounds reasonable, right?
Seems pretty straightforward, pretty standard advice.
So what's wrong with that?
Well, Kiyosaki points out a few major flaws. First of all, how does this retiree know which mutual funds are solid?
Good point.
Which ones are going to tank?
Right.
That's a huge assumption.
Yeah.
And even if you could pick the winners, isn't Kiyosaki's bigger point that even seemingly safe investments can be incredibly risky?
Yeah, he uses that example of the mutual fund that was super popular in 1999 and then lost a ton of value by 2001.
Right. It completely tanked. So, you can't just assume that something that's doing well today is going to continue to do well.
So it's not just about the specific advice. It's about having the knowledge to question those assumptions and make informed decisions.
That's right.
And this all goes back to those mandatory withdrawals to define contribution plans.
Yeah, as more baby boomers retire, Kiyosaki thinks it's going to amplify market volatility.
Okay.
Imagine a bathtub with multiple holes punched in it.
Wow.
You're adding water, but it's draining out faster.
You're in trouble.
You're going to have a problem.
That's a great analogy. I like that.
That's the risk he sees with relying solely on this approach.
So if traditional retirement advice might be leading us astray, what's the alternative?
Well, Kiyosaki challenges this whole idea of seeking job security above all else. He pushes for what he calls real-world education, where you're not just learning to earn a living, you're learning to create wealth.
Interesting.
And this is where his cash flow board game comes in. It's not just a game.
I've heard of cash flow.
It's a way to learn about different paths to financial freedom.
Okay, tell me more. How does that connect all of this?
So the game illustrates 4 different levels of investing, starting with small deals. Think like low-cost real estate, starting a small business.
Okay.
Then you move up to big deals, which require more capital, more experience.
So bigger investments.
Yeah, things like larger properties, expanding a business.
And then it gets really interesting.
Right, then you get into sophisticated investing.
Right.
This is what you're talking about. Private placements, venture capital, high risk, high reward stuff.
That's for the more experienced investor.
Exactly. This is where you need a deep understanding of finance.
Got it.
And then finally, there's capital gains technical investing. This is the really advanced stuff, like options trading. Sophisticated financial instruments requires a lot of expertise, high risk tolerance.
So Kiyosaki argues that most people get stuck in the rat race track.
Yes, he says most people are stuck there, chasing job security, relying on these limited investment strategies.
Right.
But the fast track, the track that leads to financial freedom, that requires a different level of education, a willingness to take calculated risks.
No, it's not just about working hard, saving money.
It's about understanding the different ways to build wealth.
Yeah.
And choosing a path that aligns with your goals,
Okay.
your risk tolerance.
And Kiyosaki, he doesn't shy away from encouraging people to consider starting a part-time business.
Right, especially if you don't have a lot of capital.
He tells this story about a woman with no time and a man with no money. And they came to him for advice.
They wanted to know how to get started.
And he basically told them, start with what you have. Focus on your financial education.
Yeah, even if it's just time, even if it's just a small amount of money.
That's really empowering.
It's about shifting your mindset from scarcity to resourcefulness.
Yeah, don't let your circumstances limit your potential.
Exactly.
Okay, so this is all great in theory, but I'm curious, does Kiyosaki ever turn down what seem like safe, solid investments?
He does, actually.
He does.
He talks about rejecting an opportunity to invest in a newly built supermarket, even though it had seemingly secure returns.
Wow, why would he turn that down?
Well, because Kiyosaki, as a sophisticated investor, he's looking beyond just the upfront cash flow. He's factoring in things like location, potential for appreciation. His overall return expectations are much higher than what a traditional financial planner might consider.
He's playing a different game.
Yeah, he's operating on a different level.
So it's not just about following formulas. It's about understanding those nuances, risk management, developing that financial intelligence.
Absolutely.
Okay.
And even with all this knowledge and experience. Kiyosaki emphasizes this crucial point.
With that.
Assets can quickly turn into liabilities.
Oh!
Especially given market volatility.
So even if we're building this rich arc, we need to be prepared for rough seas.
Always be prepared.
Okay.
Things can change quickly.
So Kiyosaki isn't suggesting we go it alone, though, right?
No, he talks about the importance of having a team of competent advisors, financial planners, lawyers, accountants.
Yeah.
But he's adamant that you are the captain of your ship.
You're the one steering.
Exactly.
So it sounds like even though we're getting deep into Rich Dad's prophecy, the message is about taking control of our financial destinies.
That's a great way to put it.
It's about empowerment.
It is. It's about taking ownership.
Okay, there's a lot to digest in part one. But any key takeaways you think listeners should really hold on to?
I think the biggest one is financial literacy is not optional anymore.
It's essential.
It's about understanding how money works, how to make it work for you,
Okay.
how to avoid those common pitfalls.
So it's not just about saving money. It's about understanding how to make your money work for you.
Especially in this landscape that Kiyosaki is describing,
Right.
this changing world.
All right. Stay tuned, everyone, for part two, where we'll continue unpacking Rich Dad's prophecy.
Can't wait. It's going to be good.
All right. So we're back. And that question about assets turning into liabilities, it's definitely been on my mind.
Yeah, that's a big one. Kiyosaki really emphasizes that throughout the book. Even things that seem solid and secure, they can shift, especially with the kind of market volatility he's predicting.
Right. That's a good reminder that nothing's really guaranteed. In the financial world, when Kiyosaki talks about this rich arc, it makes me wonder, is it really all about the money? Or is it about something more?
That's a good question. It's a deeper question.
Like security, peace of mind.
I think it's about both. It's about having the money, but it's also about the freedom, the security that comes with it.
Okay.
And Kiyosaki connects this to a really fascinating concept called ephemeralization.
Ephemeralization. Okay, I got to be honest, I've never even heard that word before.
Yeah, it's a mouthful.
What does that even mean?
So it's an idea from Buckminster Fuller, this really forward-thinking architect. And he described how things start small, they grow huge, and then they get replaced by something new, something we often can't even fully grasp yet.
So are we talking like giant ships replaced by airplanes?
Yeah, exactly. And then maybe airplanes are replaced by some crazy space travel technology we can't even imagine yet.
Okay, so things are always changing.
Always evolving. And that applies to investments too.
So what worked for our parents' generation might not work for us.
Exactly. And what works for us now might be obsolete tomorrow.
Wow.
Think about how much the internet has already transformed the way we earn, spend, invest money.
Yeah, that's a lot to take in.
It's a lot of change.
So how do we prepare for a future that's so uncertain?
Well, Kiyosaki emphasizes the importance of financial education. But it's not just about the nuts and bolts. It's about developing a mindset that embraces change, that seeks out new opportunities.
So he talks about becoming financially intelligent.
Yes, that's a key concept for him. It's not just knowing stuff. It's about being able to think critically, adapt to new information, make smart decisions.
Even when things feel shaky.
Especially when things feel shaky.
Okay, so true financial freedom, it's not just about avoiding risk.
It's about understanding how money works.
It's about understanding the levers of wealth creation. That's not just trying to avoid losing it.
Exactly.
And he's a big advocate for diversifying your income streams,
Absolutely.
not just your investments. So instead of putting all your eggs in different baskets, you should have multiple baskets.
That's a perfect analogy.
To put those eggs in.
Multiple baskets, multiple income streams.
And he's a big proponent of building businesses, investing in real estate.
Yeah, he sees those as ways to
create passive income, build long-term wealth.
And it goes back to that idea of taking control, being the captain of your own ship.
Exactly.
You're not just relying on an employer or a single investment to steer you through those storms.
You're building your own arc.
Okay, so he's big on having a team of advisors, financial planners, lawyers, accountants.
Yes.
But you're the one calling the shots.
You're the captain. You need to understand the game.
He also talks about the emotional side of investing.
Oh, yeah. That's huge for him.
Yeah.
He talks about how fear and greed can really mess with our heads.
Lead to bad choices.
Exactly.
It's like that saying, bulls make money, bears make money, but pigs get slaughtered.
Yeah, you don't want to be a pig.
Kiyosaki wants us to be savvy investors, not gamblers.
Right.
Driven by emotion. Make rational decisions.
Okay, so how do you stay level-headed? When the market's going crazy, everyone's freaking out.
Well, he emphasizes having a clear vision, a strong financial foundation, and the discipline to stick to your plan,
Even when things get rough.
especially when things get rough.
He also talks about learning from mistakes.
Oh, absolutely. He doesn't shy away from that.
Not beating yourself up,
No.
but using those experiences
Learn from them.
to adjust your approach, move forward.
He embraces failure as a learning opportunity.
So it's not about avoiding failure. It's about knowing how to get back up
That's resilience. And that's key.
when you get knocked down.
Yeah. In the world of finance.
And Kiyosaki reminds us that
Yeah.
the financial world is always changing.
Always evolving. What works today might not work tomorrow.
So adaptability is crucial. All right, so we've covered a lot here. It's like we're starting to understand Kiyosaki's blueprint for navigating this uncertain future.
It's a roadmap. It's a guide.
And what's interesting is how relevant his ideas are to the challenges we're seeing today.
It's like he wrote this book with an eye toward the future.
He's not just offering predictions. He's giving us a framework for how to think about these changes, how to position ourselves to not just survive, but thrive.
Right. He wants us to be prepared.
And one of the key questions he poses is, how do you build an ark?
That's the big question.
And he's not talking about a literal ark.
Right. No, he's talking about a financial arc, something that'll keep you afloat
Okay.
when the storms hit.
So he lays out this pretty detailed plan. But I remember it all starts with understanding different ways to generate income.
That's the foundation. He argues that most people are stuck in the E quadrant, working for someone else, trading their time for money.
The E stands for employee.
Exactly.
And while there's nothing wrong with that, Kiyosaki encourages people to explore the B and I quadrants.
The B for business owner, the I for investor.
Okay.
Those quadrants offer more control over your income.
The potential for passive income.
Your money's working for you, even while you sleep.
But Kiyosaki's not saying it's easy to become an entrepreneur.
No, it takes work. Or an investor.
It takes dedication.
It does.
He emphasizes that. Building a successful business, becoming a savvy investor. It requires learning the rules, managing risk, building that solid foundation. But he's encouraging people to step outside that chicken coop.
Yeah, get out of that comfort zone. Explore different possibilities.
And so it's about breaking free from that traditional path of just getting a job, saving money, hoping for the best.
Exactly.
He provides specific strategies for taking that leap, whether it's starting a side hustle, investing in real estate, exploring other ways to generate income.
Find what works for you.
He also emphasizes taking action.
Oh, yeah.
It's not enough to just read about these ideas.
You got to do something. You got to put them into practice.
He's all about action.
Absolutely. Knowledge without action is useless.
So get your hands dirty. Learn from your experiences, refine your approach.
And don't be afraid to fail.
And he also talks about mindset, right?
Mindset is huge. He's a big believer in...
Not letting fear hold you back.
No. Believing in yourself.
Taking calculated risks.
Or positive thinking.
Okay, so it's about developing that entrepreneurial spirit, that willingness to step outside your comfort zone.
Embrace the challenge.
And it's not just about the money. It's about the freedom, the fulfillment. That comes with creating something.
Building a business, making smart investments, living life on your own terms.
This is inspiring.
It's empowering.
But let's be real. Not everyone wants to be an entrepreneur or a high-stakes investor. Some people are happy working for someone else.
And that's totally fine.
So does Kiyosaki have advice for those folks?
He does. He stresses the importance of becoming financially intelligent, no matter what your career path is.
So understand the basics. Personal finance, investing, wealth creation.
Even if you choose to remain an employee.
Okay, so it's about taking ownership of your financial future, no matter what path you choose.
That's the key takeaway.
All right, we've covered so much. As we head into the final part of our deep dive, any key takeaways you think listeners should remember?
I think the biggest one is we're living in a time of unprecedented change. And the old rules of the game, they don't apply anymore.
So Kiyosaki's philosophy gives us this framework for navigating these changes, creating a more secure financial future.
It's about becoming financially intelligent, taking control, building that ark that can weather the coming storms.
And it's about embracing change, developing a growth mindset, constantly seeking out new opportunities.
Yeah, always be learning.
Kiyosaki wants us to step up, be active participants, not passive passengers. hoping for the best.
Take control of your destiny.
This has been an incredible conversation. It's like we're starting to see Kiyosaki's vision for the future.
And it's not all doom and gloom.
It's empowering.
It's about taking action.
Before we move on to the final part, let's leave our listeners with a question to ponder.
Okay, I like that.
Kiyosaki talks about seeking out competent advisors. But you're ultimately the captain of your own ship.
Right.
So how do you find that balance between seeking expert advice
Yeah.
and staying in control
That's a good one.
of your financial decisions?
It's a tough question.
And as you think about that, consider the concept of ephemeralization. What invisible forces might be shaping the future of finance? How can you position yourself to not just adapt but thrive in this new world that's emerging? That balance between expert advice and personal control. It's tough, right?
Yeah, it's a tricky one.
Like, how much do you trust the experts? And when do you got to trust your gut?
Well, I think Kiyosaki's point is you got to be an informed captain. You can't just blindly follow advice
Right.
without understanding the why behind it.
It's just as risky as
Yeah,
making decisions based on gut feeling alone.
exactly. You need both.
And we were talking about ephemeralization
Yeah.
at the end of part 2. It's kind of mind-blowing to think about these invisible forces shaping the future, especially when it comes to our finances.
It's a big content.
So where do we even begin to wrap our heads around that?
Well, Kiyosaki says you got to understand the rules of the game and how they're always evolving. He
Right.
says a lot of people are playing by outdated rules.
Especially with retirement planning.
Yeah, that's a big one.
Remember that chicken coop analogy?
Oh, yeah, that chicken coop.
Most people are stuck in this system.
Yeah.
That might not be serving them anymore.
It's comfortable, but is it really safe?
Exactly.
Especially with all these changes happening.
So what does it actually look like to step outside the chicken coop?
Well, Kiyosaki advocates for this mindset shift
So,
from being a passive employee to becoming an active creator of wealth.
so explore those B&I quadrants. Become
Yes.
a business owner or an investor.
Yeah, but he's not saying everyone needs to be a CEO or a real estate mogul.
Right.
It's more about understanding the different ways wealth is created.
Finding a path that works for you.
Exactly.
Okay, so we're building this rich arc to weather the financial storms.
That's the goal.
What are the key components?
Well, the foundation is financial intelligence, understanding how money works, how to make it work for you, how to avoid those common pitfalls.
And it's not just about being good with numbers. It's about that entrepreneurial mindset.
Right? Seeing opportunities, taking risks, learning from your mistakes.
Kiyosaki also emphasizes having multiple streams of income,
Absolutely.
not just relying on one job.
Yeah.
Or one investment.
Diversified.
I loves businesses,
Yeah.
real estate,
Yeah.
because they can create that passive income. But that takes time and effort.
It does.
There's no get-rich-quick scheme here.
No.
But even small steps can make a difference.
That's what Kiyosaki says.
Starting a side hustle, investing in a rental property.
Build that momentum.
And he talks about having a team of advisors, too. Lawyers, accountants, financial planners.
Yes.
But ultimately, you're in control.
You're the captain. You make the final decisions.
So this is where financial education comes in. You can't just blindly follow advice.
No, you need to understand the reasoning behind those decisions.
Kiyosaki says knowledge is power, and financial literacy is the key.
It unlocks that power.
He also talks about managing your emotions. Fear and greed can really cloud our judgment.
They can make us do crazy things.
So develop discipline. Stick to your plan.
Even when things get volatile.
Don't let fear paralyze you. Don't get caught up in the hype. It's about having that long-term vision.
That's it.
Okay, easier said than done, especially when the market's going crazy.
It takes practice. But having a clear plan, understanding your goals, knowing your risk tolerance, that'll help you stay the course.
So if we were to boil down Kiyosaki's philosophy into a few key principles,
Okay.
what would those be?
I'd say develop financial intelligence, take control of your finances, diversify your income streams, build a strong foundation, manage your emotions, seek out advisors but make your own decisions, and never stop learning.
Okay, those are powerful principles. And Rich Dad's prophecy might sound a bit doom and gloom sometimes,
Yeah.
but Kiyosaki's message is really about empowerment.
Yeah, he wants us to wake up, take action
Create a better future.
for ourselves and our families.
And he might be a bit contrarian, challenging traditional thinking, pushing us out of our comfort zones.
He likes to shake things up.
But his message is ultimately one of hope and possibility.
He believes we have the power to shape our own destinies.
This has been an amazing deep dive. We've explored some complex ideas, challenged some assumptions, and hopefully sparked some inspiration.
I hope so.
So remember, everyone, this is just the beginning. The real journey starts when you take these ideas and put them into action.
So keep learning, keep growing, and keep building that rich arc.
Happy sailing, everyone.